Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Christian Tharp on the line. He is the author of the 5-Star Stock Watch. He is a biotech trader. Christian, thanks for coming on this morning. How you doing?
Doing great. Thanks for having me, Joel.
All right, now I know you follow the biotech sector and a lot of other things. You usually have a pretty good feel for the overall market here. So, range-bound market, it seems like no one even cares about Greece anymore. No one's worried about interest rates going up. So, just give us your take on the overall market.
Sure. Yeah, I think you said a lot of it right there. It's kind of funny how no one ever cares about Greece and rates if the market rallies, right? So it's only when it sells off that you got to come up with that reason. And all in all, the last 4 or 5 months, the market really hasn't done a whole lot. And what I've encouraged, listeners, members, readers to do is really focus more on the overall market and what does it tell you, because trying to trade or get ahead or decipher those types of headlines aren't really doing us any good, especially in this market where it's just that, as you mentioned, range-bound move. So when you look at the market, I do think that there's some good news when it comes to looking at the market. To me, good news would be if I look at a stock or in this case, a market, and I have clear, entry and exits, I guess you could say. So, for example, if somebody looked at the S&P, the S&P is clearly having a tough time in the 2125 to 2135 area, right? So that's where we keep stalling. And for me, as a technical analyst, I like that because if we can break through that area, then probabilities tell me we should be going higher. Let's get long. Let's have a good time. On the other hand, when I look at the S&P, there's been a development, and one of the things we talk about in our daily video newsletter, just kind of updating the market all the time. For several months, there's been a lot of underlying weaknesses in the market that really that are consistent with a market that's peaking out in some magnitude. And I know that people don't want to hear that. Yeah. Everybody always says we're topping, we're peaking, but I'm not talking about doom and gloom. I'm talking about, if you look at the technical characteristics of the market, things are developing that we haven't really seen develop in this last 3 or 4 year run up. And I think those things probably explain a little bit of why we're having a tough time, going higher. Like, for example, just a small, easy thing. Everyone should be concerned with the fact that the NASDAQ was the only major index to hit a new high this month. Not confirmed by the S&P, the Dow, the transports, the NYSE, nobody. Now go back to 2007, NASDAQ hits a new high in November. No one else confirms that high. So that's something that could be wiped out with a market that plows higher, but there's just a lot of those little things that are starting to mount where, for me, I question whether or not the market's going to have enough gusto to break through that top level.
The one consideration, Christian, when I was analyzing the overall markets, though, and I started to look over at the world markets there, and you can see, there's still problems over in Europe. Even though Greece has kicked the can down the road, obviously the Canadian markets are in trouble because resource base there and oils and and gold is in real trouble there. So the Canadian markets aren't a really good place to hide. China is a terrible place here to hide right now. Japan's been in a 25-year recession. I don't know where the money goes. With low interest rates, it looks for a home. I look at the U.S. markets and I see it almost as the best place to be. So that's one consideration that I have here, why I get scared to short this market, because I don't know where the U.S. markets, that is, because I don't know where else money can hide.
No, I couldn't agree with you more. I think that would explain, because that's something you can probably imagine comes up a lot. Why is it that, obviously we've seen the headlines with China's market and of course all the other markets you mentioned. Why are we where we are? And I think you probably hit the nail on the head as good as anybody could, where, best house on a bad street or something, right? That whole analogy, yeah. Or it is the best place to be. But it's one of those things where I look at it and I say, for me, again, always coming back to what does the market tell me, and not trying to decipher what's going on in the news or, what's the feed. I kind of say, well, what matters to me is what the market is doing, how it's reacting to these things. And so, for example, if we look at the top side of the NASDAQ, for example, we were following the NASDAQ back in June, where we highlighted simply that, hey, NASDAQ's got a nice little cute ascending triangle that we're forming. Hey, if we break out to the top side, we should be going to new highs. And, that's what we did. So we look at these issues, but then we start following and noticing that, well, wow, that's strange. In June, the only two indices that actually hit those highs were the Russell and the NASDAQ. The major blue chips, the big guys, didn't confirm the high. The broader NYSE did not confirm the high. Move forward to July, there comes a point where the market, we can't make excuses why our market has to go up all the time, and that it can't go down, because it can and it will, right? We all know that. So for me, I look at it and say, well, when is the market giving me signs that there could be trouble? I agree with you completely. I certainly wouldn't jump in front of it and start shorting everything like that. What I look for is confirmation of those warnings. So no different than if somebody wants to look at the news. Well, everything could be wonderful in Greece. I think we all know that's not the case. But if the market confirmed for me that it was no longer worried about it, i.e. the S&P breaking out to the top side, then I would say, okay, market, I'm going to trust your lead and go. But I look at, probably one of the biggest things that I look at right now for me is when I look at monthly momentum on the S&P and the Dow, but specifically on the S&P, I like to follow a very simple RSI and look at monthly and weekly scales to see what the bigger underlying currents are. And back in February and March, the S&P momentum started to diverge from price, which is something that's consistent with a market that's running out of gas. It's getting weaker as it goes higher. So when someone says, yeah, Christian, yeah, but everybody always says market's going to top, it never does. I always say, well, yeah, but the last time we saw this happen was 2007. The time before that was 2000. The time before that was 1998. So the market has been 3 for 3 in showing me on a broad scale, if I can form this, there's a high probability of problems. And it doesn't mean we drop right this second, of course. Any kind of topping process is a process. And when I say topping, I don't necessarily mean the end of the bull. I just mean when you look back at the last 3 times we formed these momentum divergences, that's a very big picture. It takes a lot to make that happen. So this isn't a quote signal that's popping up every third day. It's popped up 3 other times in 20 years, and the minimum drop that occurred was 25%. So I look at it and say, well, is it possible that we are the best place to put money, but eventually we have to follow suit with everyone else, kind of dragging us down? So, I do get a little bit nervous about the market, but I would agree with you completely. That certainly doesn't mean that I'd want to start jumping in front of it. So I'm looking at levels of support. At Dow, if you look at the Dow, where did the Dow just find its bottom this week? Check out its 4-year channel, exactly where it found support, right? So I'm looking at something like that. If we break out of the bottom of that, that would be one of the first big shots across the bow telling me, all right, my technical weaknesses that I'm seeing are actually starting to play themselves out, and we're breaking down. S&P has a level, 4-year channel as well, but its support is much lower, down near 2010. So these are the things that I would encourage your listeners to watch. Those dark clouds rolling in that I'm talking about don't mean it's going to rain. But the more and more clouds that roll in, the more likely it's going to rain. So
we're on the line with Christian Tharp. He's the author of the 5-Star Stock Watch. He's a biotech trader. I want to talk a little technicals with you here, Christian. S&Ps, whatever caught the bid at 8:30 there, is continuing on. Now, I just want to go a little bit to your technical analysis techniques and strategies. For me, and I think Dennis for the most part, we really concentrate a lot on daily highs and lows. And the S&Ps have really found a level here at 2104. It was the high from last Friday. Wednesdays and Thursdays highs are there as well. I mean, we're now popping above that level. Do you put any emphasis on double tops and triple tops?
Oh, absolutely. For me, everything is trying to get down, kind of get back to this basic price action. Because I think price action can tell you a lot. And more often than not, it's more important. So in other words, moving averages aren't doing anything that price didn't tell them to do. Okay. Right? Momentum indicators aren't doing anything price doesn't tell them to do. So I agree. Absolutely. I like seeing, that's what I like about watching the S&P right now, and the fact that the good news is I have these nervous feelings about the market, but if the S&P can pop up through that zone of 2125 to 2135, that clear resistance across the top, the good news is I can stop worrying about these negatives, and I can say, all right, unless I'm getting faked out here, the market is telling me we're taking a leg up. So absolutely I do.
All right, let's talk about sector or something that has been doing so well, and that's the gold market here. Have a breakdown dealing with another handle here, dealing with the 11 handle. When you see gold make these kind of formations here, the consolidation that usually is winding up for its next big move. The trend has been down here, so if you're sticking with the trend, looking for another leg down, maybe triple digits in gold, or if you're just sticking being a gold bug here, getting back above 1100. Actually, I just noticed we've had about a $10 rally in it. How are you analyzing the gold market, Christian?
Sure, sure. A big topic, especially after the new lows we hit just recently. But I look back years ago. I remember writing an article on gold, and it was I'll never forget. I think if I remember correctly, it was April, back in 2011. And I'm sorry, not 2011. The peak was 2011, but April I think it was 2013. But I think the month was April or something like that. And I remember gold had established a very clear support shelf at 15 and a quarter ish, and we had broken that level. And then of course everybody came in and said, "Hey, great buying opportunity." I'm looking at it saying, "Well, no, I think gold's going a lot lower." That was an important shelf. Not to mention, we just crossed into bear market territory at that point. So of course everyone wanted a target. And, it's very difficult to say, well, I think a bear market is going to go here and have any kind of real, I don't know. I mean, I could say another 10%, another 20%, is it 50%, that type of thing. But I remember I clearly said, look, if we continue to drop, which is what I would expect, it really seems like that $1,000 breakout point, not to mention it's a psychological number, but if everybody goes back to 2008 and beginning of 2009, gold had a clear shelf resistance right around 1,000, and that breakout is what led to the run up north of 1,900. So I think back at that time in 2013 when I said, well, you know what? Really, it would seem like the stock or the gold wants to come back to 1,000. Very similar to if everyone looks at Priceline way back in that same period of time. Priceline, PCLN, created a clear resistance at 550, right? And then when that stock broke through, took off, ran all up to 700, and it broke out of a double top, started to fall. Where did it come all the way back down to? The 550 breakout point. So to me, gold looks very, very similar to that, in which I would think that ultimately we make it to that 1,000. We're the majority of the way home now. Breaking below 1,000, I believe, opens up some problems. When people talk about 700 and 800, it's very easy to say, oh, that's not going to happen. Well, I don't know. I mean, I think people, when we were at 17, 1800, didn't think we were going to be falling down to 1,000 either, but here we are.
We fall under
I think if we don't hold 1,000, we're in trouble.
Yeah, well, if we fall under 1,000 here, Christian, what does this mean for all the gold miners? Because their cost of production, a lot of them is $1,100 to $1,200 an ounce here, so they're all going to be losing money. We start falling under 1,000, or some of these companies going to go out of business? I just look at the charts of like Barrick Gold, ABX, or GG, or NEM. These look like they're on death marches to like zero here. I mean, Barrick Gold was a $50 stock; it's at $7 here now. It's pricing. These miners are pricing like gold is going to go under a 1,000. So I almost agree. I agree with you here because I don't know. These stocks just can't catch a bid, and it's probably because this gold starts falling under 1,000. They're going to start losing a lot of money.
No, I couldn't agree with you more. Think back to and what we're talking about too. It's something that I encourage everyone I coach and I work with, that you want to really listen to the market and what the market is telling you more than say what the financial media might be telling you, because price is king and the market is boss. And so, for example, you mentioned Barrick Gold. Well, everybody look back at Barrick Gold last year, right in the fall. Stock clearly was holding 15 as support. It broke it. Market is telling you Barrick Gold is going lower. Now look here recently, end of 2014, beginning of 2015, stock is clearly holding $10 as support. It broke it. Market is telling you, regardless of what everyone is telling you, the fundamentals may or may not be about miners and gold, Barrick should be going lower. And now we're talking about a $7 stock. I think back to the financial crisis where the market was telling us there was a problem in housing. The market was telling us there was a problem with financials. What ended up happening to a lot of those companies, I think we all know how that worked its way out. So I wouldn't see any reason not to expect that we might see some problems with some of these companies. Which ones, and here that, I kind of look at what does the market tell me? Which ones have been the weakest? You look at AB, that certainly looks worse than, say, something like, I don't know, you pick a Anico Eagle Mines looks a little bit better, right? I mean, not much, but a little bit better than certainly Barrick does. But they're all starting to, look bad. So I wouldn't be surprised, I guess.
You know you have a good interview when you have the biotech stock 5-star guy, and you don't get to talk any biotechs. I'm sorry, Christian, but we're out of time here. I'm going to have Brianna ring you up and get you on again here because there's certainly a lot to talk in that sector. We just love talking the general market with you. Great information as always. Christian Tharp of the 5-Star Stock Watch joining us here in Benzinga's Pre-Market Prep. Thanks a lot, Christian. We'll speak to you again soon.
You bet, guys. Have a good one.
Thanks, Christian.